You know, you talk about the change of the guard at the top when it comes to central banks. I mean, obviously, Bullard was big news that maybe the market took that as maybe the Fed could lean a little bit, less hawkish, more dovish now. You pair that with the softer inflation numbers that we've got this week. Are we really getting close to the end of the tightening cycle for the Fed, you think?
I think that's a perspicacious insight in terms of the developments that we've seen recently, and I think that the door has certainly been open for the Fed to become less hawkish, and we've been in the mindset that we'll probably see one more rate hike at most, from now until the end of the year. I think in general that high inflation narrative has become passé. We're certainly in a disinflationary environment from China, from the U.S., and I think that those trends will continue.
David here. Good morning. Nice to see you, sir. The proclivity of markets this week has really been towards risk. I mean, almost pick your asset. Do you think that continues? And if so, how would you chase this risk rally moving forward?
I wouldn't chase the risk rally in the U.S. I think U.S. markets are a bit frothy at these levels, but I think risk on in emerging markets, especially in China, makes sense, given that these economies tend to be more cyclical. Most of the central banks in Asia have paused. They would be cutting rates if it wasn't for the Fed. And so I think that if the Fed does pause more concretely and for a longer period of time, that certainly opens the door for monetary policy to ease more in Asia, which should be good for both assets and the economy in Asia.
Would you call this week, David, a bit of a watershed moment for financial markets, given all the assumptions that we made in the macro front were pretty much wrong, about China's recovery, about the U.S., the economic deterioration that really didn't transpire. Are we finally seeing markets maybe on the right page at this point about how the outlook's going to look like in the second half?
Right. I think that many were caught off guard as to how China's growth would sputter in the second quarter, and then all eyes are certainly on what policymakers are going to do to institute some more fiscal stimulus. And then the big surprise is how resilient the U.S. economy is. But I think that the narrative in the second half should be that the U.S. growth is going to slow, and we haven't seen the full effects of the abrupt tightening from last year, and then I think that the stimulus measures in China are going to be piecemeal. I don't think we're going to get a silver bullet when it comes to fiscal or monetary stimulus. Mm-hmm. But I think that consumer sentiment should start to pick up in the second half of this year.